Hello, this is Dov Byrne with Principles of Finance, and I am here to demonstrate part one of your company analysis project. We are going to first download the company analysis project template and open it up in Excel. I'm using Excel 2008 for Mac, so this might look a little bit different than what you're used to. First, we're going to go to Yahoo Finance and look up our company that we've chosen. And we're going to need to look at the income statement, the balance sheet, and we'll need some information from the cash flow statement. We're going to start by copying and pasting the income statement from period ending all the way through net income. And then we are going to choose Paste Special to get our information, and choose Paste Special Text to get our information over into Excel. These dashes need to be changed to zeros. And then we can format all of our information to accounting with no decimal places and no dollar sign. And there, our zeros are back to being dashes, but this time they're in fact zeros. The first calculation we're going to do is for gross profit. Gross profit equals total revenue less cost of revenue. And we'll give a little subtotal line anytime we do a calculation. We can drag it over. Operating expenses is a heading, and we can indent our operating expenses. And we can calculate total operating expenses as the sum of all the individual operating expenses. Give that a subtotal line and copy it over. Income from continuing operations is a heading. It gets a colon, and we will indent the information below it. And then we will calculate net income from continuing operations as operating income. Oops, skipped a step. The next calculation is earnings before interest and taxes. And earnings before interest and taxes equals operating income plus other income and expenses. If this was an expense, it would be a negative number, but it's not, so we know it's income, so we're going to add it when calculating our earnings before interest and taxes. So earnings before interest and taxes equals operating income plus total other income, expenses net. And we'll give a subtotal line, and we'll copy it over. Income before tax is our next formula, and it's going to be earnings before interest and taxes minus our interest expense. And net income from continuing operations will equal income before tax less income tax expense. And if we had any minority interest, we would subtract that as well. We don't, so I'm actually going to leave it out. In fact, if you have zeros in all 4 years and you know you're not supposed to have a number there, you can actually go ahead and delete them entirely. Now, if you see interest expense is 0, we know that we have to have interest expense. And if your company has debt, yet Yahoo is not reporting interest expense, you're going to have to go look up that interest expense on Merchant Online. So we'll do a subtotal here, copied over. And then you notice that my net income from continuing operations equals my net income because I don't have any of these discontinued or extraordinary items, so I can delete it. And then I can simply call this net income. And we have calculated all of the formulas for our income statement. Now what we need to do is we need to separate out depreciation expense from these operating expenses. And the easiest place to do that would be to separate it out from selling, general, and administrative expenses. So what we're going to do here is we're going to insert a row. I'm going to call it depreciation expense. And then we're going to have to go look up that depreciation expense on our cash flow statement. And here, the very first item on the cash flow statement is the 3 years of depreciation expense. So we'll go ahead again, paste special, choose text, and paste in our depreciation expense. Now we could double check our operating expenses to make sure it includes that, and because we use the sum, Excel knew to include the depreciation expense in our total operating expenses. But now that just increased our total operating expenses. Oh, missed the formula. Operating income or loss. Operating income or loss equals gross profit less total operating expenses. So don't forget that one, because you notice when I put into depreciation expense, my net income didn't change. And so here we will put in the formula for operating income or loss and drag that over as well. So we didn't want to change the net income here. We just wanted to separate out depreciation expense from selling, general, and administrative expenses. So what we're going to do is we're going to have to reduce selling, general, and administrative expenses by the amount of our depreciation expense. So I'll have to create a little formula here. Selling, general, and administrative expense less the depreciation expense. And then we can drag that over as well. And now we have the same net incomes as we had before. We've just separated out depreciation expense from selling, general, and administrative expenses. We should probably give this heading, income statement, income statements, and we can go ahead and merge and center. Maybe just merge, give it a little border, bold it. We could change our dates just to the year. 2013, 2012, 2011. Could bold and center those. Maybe give them a border. Border as well. And that is our income statement. The next step is to do the same thing, it's essentially the same thing for the balance sheet. Going to copy and paste special. We don't need this net tangible assets. Go to the balance sheet tab. Paste special as text. And here we're going to identify our headings with colons. We can do some indenting. And our first calculation is going to be total current assets. Turn these to zeros. In fact, if there's zeros all the way across, we can just delete it. And then we have to add a line called total stockholder equity, total liabilities, and stockholder equity here at the bottom. And then we want to format all of our numbers to accounting, no decimal place, no dollar sign. Turn that to 0. So our next formula will be total assets. And that's just going to equal the sum of our total current assets all the way down to our deferred and long-term asset charges. Here we want to do a little different border, a top and double bottom border. In fact, that reminds me, we probably should have done a top and double bottom border for our net income. Here, we're just going to identify the headings. Do some indenting. And do our calculation for total current liabilities. And total liabilities. And here we just want a top border. We don't need a top and double bottom border for total liabilities. That's because total assets equals total liabilities and an equity. And so that's the two numbers we want to compare. And so that's where we'll have the double bottom border. Total liabilities, and now stockholders' equity. The heading, we'll indent, and then we'll calculate total stockholder equity. It's the sum of our equity. And then the important part. Is Yahoo reporting our balance sheet correctly? We'll know this if total assets equals total liabilities and stockholders' equity. So equals total liabilities plus total stockholder equity, and we see that it balances.